objectives. So the definition of a business objective, these are all about goals that provide direction, incentive, and purpose for management and employees within an organization. So the objectives, the business objectives that you're required to know in the study design are all of these ones. So the first one is to make a profit. So all businesses are going to be striving towards, being profitable, making as much profit as they can. And note that profit is given by the equation revenue minus expenses. So it's all about, um, you know, either increasing their revenue, so making more revenue, or even just like decreasing their expenses and their operating expenses. But yeah, ultimately, it's all about being profitable. Also, increasing market share. So, market share is the percentage of sales that a business holds in a particular industry. And so, if a business holds more sales, um, that means that they're going to have a high market share. Another business objective is to improve efficiency and to also improve effectiveness. Efficiency and effectiveness are two concepts you'll learn more about in Area Study 3, so operations management. You will definitely, like, once you go through that area of study, you'll be more confident with like efficiency and effectiveness. But yeah, all right. Then we have the next objective. So that's all about fulfilling a market need, then fulfilling a social need, and to also meet shareholder expectations. So remember that the business structures that have shareholders are your public and private listed companies. And so if you are asked to talk about a business objective for sole trader or partnership, it's really important that you don't use to meet shareholder expectations for sole trader or partnership, because that's where you might lose marks, because sole trader and partnership business structures, they don't have shareholders. And so saying that's a business objective that they sort of try and strive to meet would be incorrect. So if you're asked to relate business objectives to either of those business structures, you could literally use any one of those except that one. So just a little key thing to keep in mind. All right, then we have stakeholders. So a stakeholder is anyone with a vested interest in the performance and slash or activities of a business. So with stakeholders, you need to know their interests. So what are the interests of different stakeholders, and how might these interests conflict with each other? There are no stakeholders specified on the study design, so that means you can be quite flexible and base your answers off the case study. So every case study would have, depending on the case study you get, there would be sort of different stakeholders you can pick out, but there's no like ones that you have to definitely know in the study design, since it isn't listed. But another Slido activity, try and list some stakeholders that you can think of. Do a little bit of a brainstorm. What are some stakeholders in the business environment? Remembering that it's literally anyone with a vested interest in the performance or activities of a business. So, for example, employees. So they're sort of impacted by the activities of a business, and so they would be a stakeholder. I'll give everyone maybe a minute or two to write down some stakeholders. Awesome. It's great to see some responses. Give everyone maybe another 30 seconds to put down some stakeholders. These are all great responses. Awesome. So we have customers, amazing. We have owners, competitors, that's a really good one. That's a very important stakeholder, definitely. General community, another really good one. Shareholders, amazing. Employees, shareholders, owners, supplier, investors. So shareholders, owners, and investors, they're kind of like the same. Um, I would maybe use the terminology like shareholders. Shareholders and investors are the same. Owners would be different, but yeah, um, good, amazing stakeholders. Unions, perfect, awesome, great job, guys. These are all amazing ideas. All right, I've come up with a few, and I think a lot of these you guys have listed in the Slido. But we have employees. So their interests and their key interests are all about, having stable employment, but also, having good wages and working conditions. Ultimately, they want to be making sure that they are earning enough money to support themselves in their own lives, but also their working conditions. So that sort of links to their well-being. And so they don't really want to be working in a place that, is jeopardizing their well-being in terms of it might be, mentally, like the like environment they wouldn't want to be like abused verbally, and so they would want to have sort of good working conditions in that sense, but even maybe physically, so ensuring that the environment that they're working in is safe from hazards, safety hazards especially, all of those things. Then we have management. So they really want to be making sure that there is good business performance because that would reflect positively on them. Owners or shareholders, they would want to make sure that there's high dividends, so the business is really, performing well. Dividends is what they are giving back to, what the business gives back to the shareholders. So in return for the investment that shareholders make, in order to be a holder of shares in the company, the business, they receive dividends from the business. So that's just sort of um, so, like the higher profits that a business gets, the more dividends that shareholders also get. Um, so, yeah, that's really so high dividends are sort of achieved by successful and good business performance. Then we have customers, they are expecting high quality goods, services at reasonable prices, and also maybe some like ethical processes integrated into the business. So, products to be marketed ethically. They don't want to, be deceived or, scammed. So they should have sort of receive the product that they expect, and the product that they get should meet their expectations. Then we have creditors. They would want good performance, and also be paid on time. Government, all about, they would want to have good tax revenue, high employment, society, low unemployment, and the business sort of implementing socially responsible practices. Awesome. So, this is a key mistake that many students, including myself, I'm a victim to this, but um, confusing the terms stakeholders and shareholders. They are so similar. They sound extremely similar, and I totally get why a lot of people would confuse them. But it's really important that you read the question carefully and sort of are able to make that distinction between each of those two terms. So yeah, a lot of people, they drop marks because of silly mistakes like that. Like both the terms, but just because you were in that condition, the pressure, you sort of make that silly mistake. So something that you could do to avoid that is just highlighting keywords, making sure you're circling keywords, and reading over both the question and your answer. So at the end of your SAC, or like even once you finish completing the answer, just reread over it to make sure that you're answering the question, and you're not making any mistakes that could potentially um, cost you marks. Okay, and always leave time at the end of the SAC to screen for errors. All right, now moving on to the conflicts. So as you can imagine, in a business, many stakeholders have competing interests. These may result in conflict. So we've just gone over the interests that these stakeholders have, but these interests can compete with each other and create a bit of tension and conflict. So, a really good example of this is that employees, they want higher wages, but that's kind of the cost, that's at the cost of the business. Because if they have higher wages, the business has to pay them more. So that's going to decrease their profit because that's almost like an expense. Shareholders want high dividends, and that only comes from high profits, as we sort of talked about before. And so profits could be increased if employee wages were decreased. So that's a conflict. So if employees want higher wages, that's going to mean that the business is going to be paying them more, and that decreases their profit since that's an expense. But that's in conflict with shareholders' interest because they want high dividends, which only come from high profits. And so that's going to decrease their dividends if the business is going to be paying their employees more. And so conflict. Boom. Um, yeah, so that's a really key common example that you could use.